What a big section we've got here. Select transactions. Well, we've seen our balance sheet, income statement accounts. We've seen the core accounting accounts. These are more transactions that are specialized, customized, that dive deeper into those specific accounts. Accounting changes and error corrections. What if you mess up? What if you change the way that you present your financial statements? How do you go back? Do you retrospectively go back? Do you prospectively go forward? Business combinations. Do you combine your equity when you buy another company, when you have a merger and acquisition? Contingencies and commitments. This affects your liabilities. So yes, we have our core liabilities section and we talked about that, but in contingencies and commitments, we have more specific and nuanced examples. More common, and rightfully so, we practice them on the exam. Derivatives and hedge accounting. These are going to affect our possible investments. These are going to affect our balance sheet, income statement. Lots of good things to see there as well. Foreign currency translation and transaction. These are going to affect our income statement, right? Because when we transact with international companies, or maybe we're a company that uses a different currency than the one we're transacting with, how does that play a role? That's going to tie in with derivatives and hedge accounting a little bit, because you sometimes want to hedge your foreign currency transaction translation risk. Leases, big one here. I know you're going to have a good time. I always have a wonderful time there. Classification for leases, super important. What type of lease are we dealing with? And present value factors. We're going to see them again, just like we saw in bonds. Research and development costs. This ties very heavily in with software costs. These are intangibles. Get familiar with the phrase technological feasibility. Essentially, expensing versus capitalizing. Do you have a real project? Do you have a real product or a software? Then you can capitalize. You can add costs to the value of that asset. Do you not? Are you still toiling around in R&D? Well, then you're going to keep expensing those costs for the foreseeable future. Subsequent events. What happens if there's a significant event that happens after the balance sheet date, but before we issue the financial statements? Do we need to include that? Do we need to disclose it? Do we need to adjust the financial statements? What do we do? I don't know, but we'll find out together. And lastly, fair value measurements. There's many other sections that talk about valuations and measurements. This is another one. It's important to value our inventory and our assets properly. What markets do we use to value our specific accounts? Yes, it's easy to say we have the inventory account, we have the investment account on our balance sheet, but where do you actually get those values from? There are more specific nuances that we'll walk through and have a good time with. I don't want to keep you waiting any longer. I know we are going to have a wonderful time here. Let's keep going through. Stay strong. We've got there's a lot of good sections in here to get free points in the exam, right? You just practice it, you get free points. Well, nothing in life is free, but easier questions where you're not going to have to struggle as much. I think you're going to enjoy it and have a good time. Let's get to it.